Your coffee costs $5 today. 2 years ago, it cost $3.50. Nobody raised the price because they felt like it. Every price increase has a reason. And if you don't understand the reasons, you'll never understand why your money keeps buying less stuff. Hey, before we dive in, I gotta be clear about something. I'm not a financial advisor. Everything you're about to hear is purely educational content. You walk into a coffee shop, the barista tells you it's $5. You think the owner is just greedy. You think they're pocketing the difference. But that's not what's happening. That $5 isn't going into the owner's pocket. It's going everywhere else. And once you see where it's going, you'll understand why prices rise and why they're probably not done rising. Let's start with the most obvious one. Labor costs. The barista making your coffee needs to eat, needs to pay rent, needs to get to work. A few years ago, they were making $12 an hour. Now they need 15 or 16 just to survive. That's a $4 per hour increase. Over a month, that's hundreds more dollars in wages. The coffee shop owner doesn't have unlimited money. They need to stay profitable, so they raise the price of coffee. That $1 increase, most of it's going to pay workers more, not into the owner's pocket. But labor is just the beginning. The coffee beans themselves cost more. The farmer who grows the beans needs more money to compete with other crops. Fertilizer costs more. Shipping costs more because fuel costs more. The beans arrive at the roaster costing more than they used to. The roaster needs to charge more because their costs went up. The coffee shop buys those beans at a higher price. So the coffee costs more. This isn't conspiracy. This is supply chain economics. Every step of the journey has gotten more expensive. And that cost cascades all the way to you. Then there's rent. The coffee shop's lease is up for renewal. The landlord knows the neighborhood is more valuable now, knows other businesses would pay more. So rent increases from $3,000 a month to $4,500. That's $1,500 more every single month. How does the owner make that back? Not by cutting their profit, not by working harder, by selling more coffee or raising prices. Usually both. Utilities went up. The power company charged more because they had to upgrade infrastructure. Water costs increased, waste disposal increased. Insurance went up because everything else went up, so insurance companies adjusted their models. The owner pays $500 more a month just for the basic utilities and services needed to run the business. But here's where it gets really interesting. Taxes. The government taxes the owner's revenue. The building's property tax went up. The payroll tax went up. If the business makes more profit, income tax goes up. Sales tax means the owner is collecting money just to send to the government. The owner isn't necessarily greedy. They're just trying to survive in an environment where everything costs more and every dollar of profit is taxed. Let's talk about something most people don't think about. Inflation hedging. When a business owner sees inflation coming, they raise prices preemptively. Why? Because they know their suppliers will raise prices soon. They know their labor costs will go up. They know their rent will increase. So they raise prices now to build in a cushion, to protect against the increases they know are coming. This is rational behavior, but it accelerates inflation. Everyone's raising prices in anticipation of costs going up. So costs do go up, creating a cycle. Then there's inventory risk. The coffee shop buys beans 3 months in advance. They stock up, then prices fall. They're stuck holding inventory that costs more than the current market price. They lose money, so they increase prices to hedge against this risk. They need a buffer. They need to make enough profit to absorb losses when things go wrong. Competition doesn't stop prices from rising either. You think competition would force prices down, but if every competitor is facing the same cost increases, they all raise prices together. There's no advantage in staying low if everyone's going up. Plus, there's brand pricing. A coffee shop in an expensive neighborhood can charge more than one in a cheap neighborhood. The expensive neighborhood one has higher costs, yes, but they also have customers willing to pay more, so prices stay high. Here's the part that destroys people financially, though. Wages don't rise at the same pace as prices. Barista gets a 3% raise. That's good. But coffee prices went up 8%, rent went up 5%, groceries went up 6%. The barista's raise doesn't keep pace with what things actually cost. This is the squeeze. Prices rise because of real cost increases, but wages rise much slower. So your purchasing power drops. You can buy less with your paycheck even though you're making more money. This is why people feel poorer. They're not. The economy just works in a way where prices and wages don't move together. Understanding this doesn't solve the problem, but it stops you from blaming individuals for systemic issues. The coffee shop owner isn't evil. The barista isn't lazy. The government isn't necessarily corrupt. Costs actually went up, and the system required prices to go up with them. But it also means you can't out-earn inflation without strategy. You need your money to work for you. You need assets that appreciate with inflation. You need investments that grow faster than prices. If you want to understand how to actually protect yourself when prices keep rising and wages don't keep up, hit subscribe, because this squeeze is structural and knowing how it works is the only way to beat it.